Okay, so imagine this. You're selling a few items online or splitting a bill with some friends, a dinner bill, right? Only to find out that the IRS wants a detailed report of all of those transactions. That sounds a little intrusive. Well, in a recent federal decision, it's put all of that stuff on pause, man. That is the scenario that is going on. What's up, y'all? It's Rick Party time. Rick Party's Notebook, news and stories from around the world and our communities from my perspective today. I want to dive into a topic that's been causing a lot of stir and a lot of panic for people. The IRS's reporting requirements for third-party payment apps like Cash App, PayPal, Venmo. A federal judge in Texas recently blocked a mandate that would have required these platforms to report transactions over $600. But what does that mean for you and me? Just the regular old people, right? So let's break this down. So under the American Rescue Plan Act of 2021, the IRS was set to lower the threshold for reporting transactions from $20,000 and 200 transactions to just $600. Now, regardless of the number of transactions, this meant that if you received more than $600 in a year through any of these apps for goods or services, you get a 1099-K form, and the IRS would be in the loop of everything that you're getting. This got a whole bunch of eyebrows raised, right? So people were concerned about the privacy and the administrative burden, especially for casual sellers. And folks are just trying to split the expenses. Now, the IRS heard the outcry and they delayed the implementation, planning a phased approach, a $5,000 threshold for 2024, moving down from $2,500 in 2025 and eventually hitting the 600 mark in 2025. But here's where it gets really interesting. A federal judge in Texas stepped in and blocked this mandate. Boom, out of there. So what does this mean though? Essentially, the lowered reporting threshold is on hold for now. Not just in Texas, but this is nationwide. So when a federal judge makes a ruling like this, it typically applies across the country unless specified otherwise. Now, let me tell you a quick story though. So a while back, I sold some old DJ equipment online, and it was just to clear space, right? Not as a business move, but under that mandate, that simple sale could have triggered a 1099-K form, adding unnecessary hassle to my tax filing. And I'm sure many of you had similar experiences. So big question is, what happens if you don't report this income? Well, failing to report taxable income can lead to penalties, interest, and potential audits, right? That's serious business. I've been through it. It's an ugly thing to go through. But remember, personal transactions like reimbursing a friend for dinner or selling personal items at a loss, those aren't taxable and shouldn't be reported. The challenge, though, is distinguishing these taxable transactions, which is part of the confusion this mandate brought about. Now, while the judge's decision offers temporary relief, it's just that. Keep in mind, y'all, it's just temporary. The IRS, they may appeal this, and future changes still could come. It's very crucial to stay informed and maintain good records of all these transactions just to make sure you're good to go in case anything happens. But I want to hear from you. Like, what apps have you used? PayPal, Venmo, Cash App to sell items or split bills? And how do you feel about the IRS wanting to track these transactions?